What's up, everyone? It's Scotty with MoneyVest. So markets here continue to trade at an all-time high, with the S&P 500 trading just over 4860, and the NASDAQ here just over 15,400. The Dow Jones did pull back a little bit under 38,000. It was still trading at an all-time high. But in this video, we're going to break down, again, the entire markets. We're going to talk a little bit about the yields and also Tesla earnings coming out tomorrow. I'm going to be doing a specific, more dedicated video on Tesla. Netflix kickstarted the FANG earnings today, pushing up almost 9% after hours after beating revenue and missing EPS expectations. So I'll be doing a more separate, more dedicated analysis on Netflix as well. Hope you all enjoy this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. Again, links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos and getting access to that 16% annual discount that's available until the end of this month, and that'll give you access to all the members only private videos. There's over 45 plus ad-free content for members only. Discord channels, over 20 plus channels available, including trade alerts, trade ideas, buy and sell alerts, options alerts. Everything's going to be available, as well as the intrinsic value spreadsheets with our fair values and watch list on individual stocks. So everything's going to be down below, linked in the description. So first things first, again, the market's pushing higher to new all-time high. There's absolutely no momentum that is stopping this market rally. And we did see a little bit of weakness towards the beginning, or towards the first half of the day, and then of course picking back up to hit a new all-time high. Now, this is something that is really, really important for everyone to understand. I sent this message out in our community, and I wanted to be as clear and direct as possible. And, you know, the whole idea behind this is I know what sells. I know fear and predictions and a lot of FUD and a lot of like precise predictions. That's what actually sells in the media. That's what gets all the views. That's what gets all the clicks. That's what gets all the attention. But I'm here to tell you the truth. If you consistently follow anyone's prediction, you will very quickly know and understand that it's absolutely useless. It is about as irrelevant as it gets. Your prediction is just as good as my prediction, okay? Because predictions just never work. I mean, they consistently just never work, okay? So my idea with this post was to give you a very straight and honest answer that nobody knows where markets and stocks are going and where are they going to go. Period. That's it. So I basically mentioned that folks have been getting a lot of questions around how high will this market go? Why are my puts bleeding? How high will this damn NVIDIA go? Let me save everyone the time and trouble and the energy and give you the answer straight. I don't know. Nobody knows. So trying to time the reversal is one of the most challenging things to do in the market, especially when you are trying to time a bearish reversal. And what does a bearish reversal mean? Bearish reversal means the markets are moving higher and higher, they're pushing up, and you're trying to time a reversal to the bearish side. In other words, a bearish reversal basically means the markets are pushing up and you're trying to time it for when it's going to start going down. That's because markets are generally trending upwards. It's in your benefit to stay and remain mostly long. Ask Michael Burry, ask Peter Schiff, ask a lot of these, Jeremy Grantham, ask a lot of long-term bearish investors how they have done, how their performance has been. Not that great. Now, ask investors like Warren Buffett and Peter Lynch and, the likes of even Dan Ives, or even the likes of Tom Lee. Like, you'll understand that they've mostly been long and they've done really, really well. So this is, again, was what I'm trying to help you understand, is that it's in our benefit to mostly remain long and not try to time bearish reversals, because it's especially bearish ones, because it's incredibly challenging and difficult to do. Now, remember one thing, timing in general is a bad idea, but if you wish, right, can't stop anyone. Trying to time a bullish reversal is easier than trying to time a bearish reversal, because as I said earlier, markets generally are long-term trending upwards. So when the markets are down 20% from their all-time highs, volatility is at over 30 or 40. That, to me, is a much better sort of much better in terms of trading long perspective. The markets can reverse here very soon because of how much we've been selling off. And statistically speaking, we don't stay down here for very long. Volatility doesn't stay up there for very long. So there's possibilities for us to dollar cost average into and start going long in that anticipation of that bullish reversal. But that does not happen on the other side, because markets generally are trending up. Volatility can stay low for a very long time, and markets can keep drifting higher and higher to new all-time highs. And that's exactly what we are witnessing right now. Okay? So Like I said, timing in general is a bad idea, but trying to time a bullish reversal is much easier than trying to time a bearish reversal. Get that through your head because it's really important to focus your energy more on assessing risk and reward better and understanding if it makes sense to buy, hold, sell, de-risk, or hedge at any given moment instead of trying to make directional bets against the trend. That's another thing, right? Because when you are anticipating, let's say the market's going to start selling off here any day now, right? And you start making bets against the trend because the trend still is upwards and you're hoping the markets are going to reverse and you're going to catch that bearish trend, you're betting against the trend, right? And that is rule number one. Never bet against the trend. We trade with the trend, not against it. Markets can and will remain irrational much, much longer than you can remain solvent. So keep it very simple, folks. Like, you don't have to overcomplicate it, because when I hear stories of people like, losing on puts or losing on short positions, it kind of hurts me. Like, it's like, why would you trade against the trend? Why would you trade without a plan? Why would you make directional bets, anticipating a bearish reversal that may or may not happen? So it's just, come on, guys, like let's just be smart about this. We understand how the markets operate, and it's all about understanding the risk and reward. And for me personally, I stay away from leverage. I stay away from shorting the market. I stay away from a lot of these riskier directional bets because I know it's a loser's game. Like, I know that long term, I may win one trade, two trades, three trades, but long term, consistently, it is a loser's game unless, of course, you are in the top 0.01% of the people in the world that have that intuition of understanding exactly where the markets are going and what the markets are going to do. And very, very, very few people can do it. In fact, I haven't even met anyone that can actually do it on a consistent basis, that can consistently short the market and make money. It's very, very difficult. So let's not even play this game. Let's play the game the right way, which is understanding the markets generally are trending upwards, and long term they're going up. They're expected to go up because as we grow, as we see more productivity, as we see more technology, things move in the right direction. And let's just focus on risk and reward and understanding what is the appropriate thing to do, what's the appropriate action to take at any given moment. So stocks are threatened by rising bond yields. How far the S&P 500 could fall. So again, the yields are moving higher, as we have already talked about in our previous videos. So if you come over to the 10-year yield, so US 10Y, you'll notice that we are starting to see a little bit of that momentum back up. It's up to over 4.11%. So we have obviously rallied from 3.7.5% back up to over 4.1. So that's over a 10% move to the upside for the 10-year yield. And again, the entire market here, Microsoft, Apple, Amazon, Google, Meta, NVDA, Broadcom, everything pushing higher here on the day, slowly and steadily. Tesla here slightly up, Amazon slightly up, Procter & Gamble pushing higher very nicely. So overall, it was kind of like a mixed day with S&P, NASDAQ still kind of notching a small green day on the back of tech. Comm services, defensive materials, technology, energy, utilities, all pushing higher with tech. Comm services, industrial, financial, these are the sectors that are up on the last 1 week and over the last 1 month as well. Lean hogs, lumber prices, natural gas, cocoa, coffee, and feeder cattle, everything pushing higher with heating oil, volatility, gasoline, and Nikkei selling off, with Bitcoin here now sitting at just under 40,000, and Ether here also at just over 2,200 as well. So that's really where we are at the moment. And this right here are the Fed funds futures. So markets pricing in now the first rate cut happening in May, and 1, 2, 3, 4, 5, 6 rate cuts is what the market is pricing in now. Once again, moving forward. So going over to the markets here, so $74 is where crude oil is trading right now. Again, this is going to be that support level sitting $72, $73 a barrel. Resistance next at $81, $82 a barrel moving forward. So that is going to be that next resistance and that target level to watch, with the crude oil support sitting roughly in the low 70s. And of course, if we come over to volatility, continues to be a little bit more muted and selling off down almost 5%. So this right here inside this red rectangle is going to be that area that we've been watching very closely. When the VIX is low, it's time to go, meaning that I'm going to be hedging with some covered calls. This is not a signal to start selling aggressively and start shorting the market. So I want to be very, very clear. And that's exactly the whole point of this video, because just because the VIX is low doesn't mean that gives us the green light to start shorting and start selling stocks. No. When the VIX is high, that is indeed a green signal to start buying, in my opinion. But when the VIX is low, it doesn't work that way, because markets generally, like I said, are trending upwards, and VIX can stay low for a very, very long period of time without actually seeing that spike, unless, of course, something actually happens. So keep that in mind. It doesn't work both ways. In this particular scenario, in this particular example, we're going to keep a close eye on the VIX here, 12 to 13 in this low red rectangle area. Very, very important levels to watch. Bitcoin here, just again, trading under 40,000. So Ether also trading a little bit under 2,300. So we continue to see a little bit of that sell-off in both Bitcoin and Ether. And of course, if you come over to the markets, so S&P 500, so this right here is going to be SPX, continues to trade at an all-time high, pushing higher very nicely, up almost 30 basis points. So again, we're in price discovery, as I mentioned in my previous video. We need to wait and see where that next resistance is going to be, but there is a little bit of that negative divergence, which I'm not super comfortable about, considering the market strength is weakening and there's not a lot of momentum behind this rally right now, considering the weakness in the RSI. So this right here is the negative or the bearish divergence that we are seeing in the S&P. So again, it's like saying that we know the markets are going to drop here. There's going to be a correction or pullback here any day, but we just don't know when, right? It's something that you do know, but it's only half of the equation, right? If I know the markets are going to at some point see a pullback or a correction, I just don't know when. And that's when that when is the timing question, right? So that's why it is really difficult to try to time the market, especially on a bearish reversal, because bearish reversal is basically understanding or predicting when the markets are going to start rolling over. So it's much better, in my opinion, to remain long, be patient, wait for entries, wait for better entries, and let the prices come to you. All successful investors that you know of, right? Long-term, Peter Lynch, Warren Buffett, Tom Lee, a lot of them have actually made money by investing long and by being patient when the markets give them those opportunities. They haven't made money by shorting the market. They haven't made money by betting against the market. Remember that, right? So if you're trying to time this reversal, just understand that you are trading against the trend and you are looking at something that you might only be right very few times. So keep that in mind. Of course, new all-time highs, bearish divergence there, still there. So I'm going to be cautious, still selling calls to hedge my positions here. And support level is going to stay put down to 4690, 4700, down to as low as 4600 as well. And of course, that 200 SMA is sitting at 4400. Don't expect the markets to come down to that level. Personally, I don't. But a 5 to 6% correction or pullback is quite reasonable at some point in the future. FOMC meeting coming out later this week, actually this month as well. NASDAQ 15,400, so we are up over 43 basis points. So again, the new all-time high is going to be sitting well over 16,000. We still have some ways to go, even though NASDAQ 100 has already hit a new all-time high. The NASDAQ composite still has a little bit of ways to go, and support level is going to stay put at 14,500 for the NASDAQ as well. And of course, a very, very nice move to the upside. This 15,400 is actually going to start turning into a new support for the markets now moving forward. Talking about Apple here, Apple was part of our swing trade and our trade idea from 180s. It has done really well, pushing back up to 195. So that's been a nice 8.5%, close to 9% return. Again, link's going to be down below. Would love to have you on board. All these trade alerts are shared with all the members. I've been dollar cost averaging and putting some money to work and sending out some alerts recently. So again, link's going to be down below if you want to join. And next target for Apple and resistance going to be at 198, close to $200 for this company. Talking about Amazon, and Amazon here also pushing higher. I also want to go over to actually the 4-hour chart for a lot of these companies, because Netflix did report earnings, and that probably is going to be moving the stock, for the FANG stocks as well. So, futures are green. We did have Amazon push up over 60 basis points after hours, back up to 156. And Apple here also, I believe, was basically flat. Didn't really move much after hours, but Amazon here with a very nice move to the upside over 60 basis points, because Amazon also has a little bit of that advertising and streaming sort of business. Netflix is a good representation of how the streaming environment ecosystem is. And again, Amazon's next target is going to be 161 moving forward. Tesla here, on the other hand, seeing a little bit of slight consolidation, earnings tomorrow, so it's going to be a huge day for Tesla. And next target and resistance obviously is going to stay put at $240. So that is going to be that next target and resistance, with of course the RSI, the MACD also starting to rotate back higher, and we've got a very, very strong area of support inside this green rectangle for Tesla as well. So we are oversold, and of course earnings are coming up tomorrow. I actually could see Tesla bouncing off of those earnings. I mean, I wouldn't be surprised if it does actually rally back up to 215, 220s after the earnings, because it's kind of like buy the rumor, sell the news, or sell the rumor, buy the news. And that's exactly what's happened. I mean, we have seen such an incredible sell-off prior to the earnings. So after the earnings, it's possible that we do see a little bit of that momentum back higher. NVDA, on the other hand, trading at an all-time high, up over almost 0.5% after hours, pushing up to almost $600. Of course, this has been an absolutely incredible parabolic move. RSI continues to stay overbought, so does the MACD, so caution is very much needed at these levels for a lot of these semiconductor stocks, including Advanced Micro Devices, which again continues to move higher at just over 168. Did see a little bit of a pullback and some profit taking, but overall continues to be very, very strong in this upward trajectory. Market cap almost at $300 billion. Support level is going to stay put down to 156, down to as low as 130, 135 for AMD as well. Talking a little bit about PayPal, and PayPal here, it's got its Innovation Day coming up. I did a couple videos on PayPal already, so make sure that you do check those out. We're sitting at just under $65 and still above the 200 SMA, which is good. That's exactly what I want to see. And the next resistance and target is going to be $77. If you do see a breakout above 65, if you do see a breakout, of course, kind of fill in this gap. Next target and resistance at $77 for PayPal. Talking about Visa, and Visa here also moving upwards, continues to move up to a new all-time high, flat on the day. Very, very overbought, so a lot of caution is needed for Visa as well. Not really buying at these levels, but of course, it's a top quality stock, which I will consider in the 245, 250 levels, all the way down to at that 200 SMA, sitting roughly 240 for Visa as well. Meta Platforms and Meta here on the day also pushing higher a little bit, over 90 basis points, so just under $400, and resistance going to stay put at 383. Actually, that's going to be a new support for Meta, so that right there is going to be the new support area of demand for Meta Platforms, all the way down to $352 to as low as $315 to $330. And of course, it's trading at an all-time high, and this has just been an incredible recovery for Meta, back higher from low 80s back up to over new all-time highs at just over 385, 390s, and market cap now once again approaching close to $1 trillion. Netflix we already went over earlier, but after hours with a huge jump of over 9%, massive green candle coming in. In fact, actually Meta might be up after hours as well, right? So Meta was up over 70 basis points, so 387, 388 is where it was, and Netflix here, of course, pushing higher a little bit up to over 9%, breaking out to over $500 per share. And of course, the next resistance and target, and of course, the almost new all-time high is going to stay put at 571. I believe that's the all-time high, right? So if you come over to the weekly chart, actually, no, almost $700 is going to be that all-time high. So next target and resistance is going to be close to 571, and this is going to turn into a new support for Netflix moving forward, considering such a massive breakout above this level. So we'll go ahead and turn this level into a support now. For Netflix, it's going to stay put at 485 to 495, and right now, of course, after hours trading well over $530. Next one on the list is going to be Google. And Google on the day up over 66 basis points. After hours was up another 42 basis points on the back of Netflix's earnings. Next resistance is going to be at 150, 151. So that is going to be that target support level inside this green rectangle, sitting between 140 and 144 for Google. And of course, a very nice higher high and higher low pattern, consistently pushing higher in that uptrend. And like I said, that next resistance is going to be a 151. Finally, we got Microsoft, Costco, and Enphase. Microsoft here pushing up to over $400 after hours, up a little bit over 0.5%. Support level is going to stay put down to $384, with that 200 SMA sitting roughly at 375, 376, all the way down to $366, kind of in line with this previous support levels as well for Microsoft. So very, very nice move to the upside. Of course, we got an overbought RSI and MACD as well for Microsoft. New all-time highs. Congratulations to everyone. And finally, we got Enphase and Costco. Enphase did push higher. I did pick up some shares on Enphase today. Maybe not the best entry or the best timing-wise, but hey, what can you do? Long-term, I still believe Enphase is a top-quality stock. Resistance is going to be closer to 121 to as high as 131. For Enphase. So those right there are going to be some levels to keep in mind for the company. And of course, all the way up to 151. Still trading below its moving averages. Of course, it's been on a very, very nice, consistent downtrend. Lower highs and lower lows. And earnings are coming out on February 6th. So that right there, again, very, very important stuff coming out for Enphase moving forward. And then finally, we got Costco, which continues to trade at an all-time high. There is some negative divergence, but it's down over 71 basis points right now. And next target and resist support is going to be $644 down to $588 per share for Costco. So hope you all enjoyed this video and an entire update on the markets. Make sure that you drop a like, subscribe to the channel. Again, links to our Discord and Patreon is going to be down below. And again, happy investing, and I'll see you all in the next video.